There are three primary ways to increase the profitability of your business, and in this video, I'm going to show you how. But first, if you're not sure who I am, my name is Dylan Hendrickson. I'm one of two owners at Stacks, where we provide fractional CFO and accounting services to primarily online business owners, currently servicing over 30 active clients and managing a team of accounting professionals. There's three ways to increase your profitability, like I mentioned. There's companies that are well ran and companies that are not, and you can spot it right away in their approach to how they increase profits. So the three ways is you can increase profitable sales, you can reduce your cost of goods/services, and you can cut operating expenses. Now, cutting operating expenses is the easiest and quickest fix, and it can provide a bit of help on the financials, as this is usually the lowest hanging fruit, but this sacrifices the long term in favor of short term and is often unsustainable in your approach to increasing profits. The best companies focus on increasing their profitable sales and reducing their cost of goods/services. And that's really how you play the long game in terms of increasing your profitability. So the first one, increasing profitable sales. There's essentially two ways that you can do this. The first is you can increase your pricing, or you can increase the volume of your profitable sales. And which is best for you will depend on your business, but oftentimes it's even a mixture of both. And really, when it comes to this part, it's really a math equation, like which combination of price, conversion rate, and lifetime value is most profitable for your specific business. So while something to consider is you could raise your price a ton, maybe you convert 10% instead of 20% like you were, but since you're getting less people in the door, you're actually not making as much money. May sometimes reducing prices slightly, if it increases your conversion rate and increases your lifetime value, over the long term, you'll actually be more profitable. So that's the balance there. And honestly, figuring this out will take time and it'll take some testing, but it's worth figuring out. The second is reducing your cost of goods/services. So your cost of goods/services refers to the direct costs associated with selling and delivering your product or service. So for like a B2B service-based business, what might be included in the cost of services for, as example, a video editing agency, this would be the payments to the contractor who edits the videos, the payments to the contractor who makes the thumbnails, and maybe some video editing software costs. The person running the video editing agency couldn't deliver the services without making those three payments, essentially, which is why I say the direct costs of delivering your product or service. Now, the cost of goods for maybe an e-com store selling shampoo, for example, this would be the cost of the bottle, the cost of the label, the cost of the shipping, the cost of actually making the shampoo, right? Just anything that you have to spend in order to deliver the product or service is essentially your cost of goods or services. Now, finding ways to decrease your cost of goods or services directly leads to increased profitability. But the balance here is you don't want to sacrifice the quality of your service or product in your quest to reduce the variable cost, right? That's just short-sighted and it's going to hurt you in the long run. Really, what this might look like in practice for your business is getting more out of what you're currently paying for. So for a video editing agency, this could be increasing your team members' ability to provide services from 5 clients to 8 clients. You're getting more revenue, but the cost to fulfill is less, which equals more profit. For an e-com company, this might be negotiating costs with your suppliers or shopping around for better terms with other vendors. This also could be buying in bulk to get a discount on the goods. Just any way that you can reduce those costs of services or costs of goods is going to increase your profits. Finding ways to decrease your cost of goods services directly leads to increased profitability. And finally, cut operating expenses. This is the easiest and the quickest one. It can provide some short-term relief to the financials, but it isn't a sustainable long-term plan to increasing your profitability. And it really shouldn't be your primary focus when you're thinking in terms of how do I increase my profits. You really should prioritize the first two that I mentioned. Now, this isn't to say that you shouldn't cut out what's unnecessary when it comes to your operating expenses. You know, it's super easy to sign up for a ton of software that you end up not using literally at all. And it just piles up and adds up quick. And there actually can be some significant costs that add up. So I do suggest taking a look once per month, maybe once per quarter, and trimming that unnecessary fat from operating expenses. That'll also help increase your profitability. But finding ways to increase profitable sales and finding ways to reduce your costs associated with delivering your product or service is going to be the two best ways to increase your profitability. Hope you learned something. Go get your profits up.